Alhamdulillah wa salli ala Rasulillah. Assalamu alaikum wa rahmatullah to our Imana community. We are back with another webinar tonight, and we have a very special and unique one for our community here, which is on the topic called Gaining Financial Confidence for Muslim Women in Medicine. This is a very unique topic, one that we have not really covered, and so I think this is something that you'll all really enjoy and benefit. We will be having a discussion here around 30 minutes after the lecture. So if you have any questions that you'd like to ask, please feel free to put them in the chat, and we will get to as many as we can after our speaker concludes her presentation tonight. Before I pass it over, I would like to introduce you all to our speaker tonight, who is Sister Fatima Iqbal. She is a distinguished investment advisor and senior financial planner with Azad Asset Management. Fatima possesses specialized knowledge in halal investing and Islamic inheritance and estate planning. Her expertise extends to planned charitable giving, where she integrates traditional Islamic charitable concepts into modern American contexts. Fatima has dual proficiency in both Islamic finance and intricate financial planning strategies. She collaborates with affluent American Muslim families, small businesses, and community organizations, guiding them toward their financial aspirations while adhering to cherished Islamic principles. Her services encompass a wide range of financial planning areas, including retirement, college, and estate planning. Fatima currently resides in the suburbs of Chicago with her family, and in addition to her advisory role, she serves as a director of the Dewan Foundation. It is a nonprofit organization dedicated to enhancing and supporting Muslim life at Cornell University. Without further ado, Fatima, firstly, on behalf of the Imana community, we'd like to thank you so much for sharing your time and your expertise with us. And with that, I'll go ahead and pass the mic over to you.
Great. Thank you so much, Amber. And I appreciate the time to be here with you all tonight. Over the next half hour or so, we're going to talk about some of the challenges and also practical ways that Muslim women, especially Muslim women in medicine, can really take control of their financial lives. So before we start, I just want to remind you that, of course, every individual situation is unique. So you will want to consult with your own advisor before implementing some of the strategies that we'll review together. But hopefully this will help you start thinking about different planning ideas so that at least you can start getting more educated about them. So just a little bit of background about who we are at Azad before we delve into our topic. And so at Azad, we've been a leader in halal investments and financial planning for almost 30 years. And today we manage a little over 1.8 billion for clients all over the United States. We actually combine halal investment management with holistic financial planning, which again, we'll talk a little bit more about in the webinar today. And we like to think of our clients as really people that we can help be their personal CFOs, but also ones that are also well versed in the Islamic financial principles. So, as Amber mentioned, I'm Fatima Iqbal. I'm a certified financial planner. I think kind of what brings me into this space is actually, I learned about service from my mother, who was a practicing physician. And so, again, as I've kind of also developed my own career, service has been a big part of it. But I also understand how important it is for us as women to also be able to have be financially independent and understand again how to manage our finances again so that we can take care of our families, meet our goals, and also again be able to focus even within demanding careers. So today we're going to be discussing the importance of planning, setting goals, and other important considerations that are, again, unique and relevant to us as women. And our goal today is really for you to take away a few good tips or perspective that can help you as you think about your own finances. And I've grouped our conversation today into three sections. So we'll start with planning with confidence, and this is about how to plan where you want to go. And then how to get started and build your wealth. And we'll go over some tactics and strategies. And finally, we'll talk about how we can control the controllables. So what happens if things don't go, and of course, most certainly won't go as planned. So let's start with planning with confidence. And when I usually meet someone I'm beginning to work with, I usually ask, what prompted you to reach out to us? And what is it that's important to you that made you pick up the phone and make the call? And, those aren't usually things that we ask ourselves, but we really should. Because once we understand what that pain point is for us, what changes we want to see, it becomes easier to have a more impactful and meaningful conversation. So, as an advisor, I look for gaps. We want to understand, have you had a previous experience with an advisor and was that good? Or was there something lacking in that? How important is it that you align your finances with your Muslim faith? Who have been the decision makers in your family and how involved have they been in your finances in the past? And so all of these really opens the conversation so that we can better understand, again, what you might be looking for, and again, how we can help as well. And of course, I always like to, help women explore questions like, what do you want your life to look like? And, this is not just talking about, very specific goals of, okay, I want to retire, but also starting to talk about and think about, what are those needs and what are those dreams and aspirations? Because, over time, those dreams can change and that's really okay. For many women, at the beginning, it maybe look, I'm really focused on making sure I can pay for my children's education. And later on, that might delve into caring for an aging parent or spouse. And the key here is really to keep coming back to see if that plan is keeping up with your vision. What do you have, and what additional pieces do you need to reach those goals? So many of you are probably familiar with the hadith, tie your camel first and then put your trust in Allah. And that hadith is based on a story about a Bedouin man who left his camel without tying it. And the Prophet ﷺ asked the man, why didn't he tie his camel? And the man simply replied, I put my trust in Allah. And the Prophet then told the man to tie his camel first and then put his trust in Allah. And I mentioned this hadith because it can be relevant in so many areas of our lives, but especially when it comes to our finances. Of course, our risk we know comes from Allah subhanahu wa ta'ala, but we also have that responsibility for planning. And while it can seem overwhelming, it can really start with some very simple steps. So I would say the first step is really just to make a list of everything you own. Start organizing. So, for example, it may be listing out your bank accounts, your real estate, your 401ks. Maybe you have an old 401k you haven't touched in a while or thought about. IRAs, children's accounts. Maybe there's some international assets or inheritances. So sometimes it's just a matter of getting all those things that are floating around in your mind organized and translating those fears into goals. And I would even encourage you to write out your goals. So, what are the things that you want to pay for? Retirement, children's college, Hajj. Again, just a quick inventory of those goals. And once you have an idea of what you want your plan to accomplish, we can then help you dive deeper into those goals. So, what do you envision retirement to look like? Is it something where you want to be traveling and you want to be exploring things that you weren't able to do while you were working? Or do you anticipate, maybe gardening or taking up other hobbies? And what age would it be that you would not want to have to work more for money? So maybe retirement isn't just about stopping work. Maybe you love what you do, but it's just saying, well, at this age, I'd really like to not have to work for money. And, would you want to continue working part-time or volunteer more? So all of these are discussions that can help us understand what's going to be important for you. And after you go through this, you might think, look, I'm in great shape. I have enough of what I need. I'm just going to keep doing what I'm going to do. Or you might be thinking, okay, I feel like maybe I'm doing okay. I've saved enough, but am I missing something? Could I adjust something? And then some people, when they finally get everything down, they realize, wait, I really feel like I might be a bit behind. Like, what can I really do to get me on track? And so whatever that answer is for you, it's really never too late to start planning. Now, also having an understanding of your assets and goals becomes important. So, again, writing everything down, believe it or not, I have had clients who, have had, 50,000 sitting in an old 401k account from their first job that they forgot about. And, not knowing where it was or how it's invested is definitely a missed opportunity when that account could be going towards, your own personal goals. So we usually like to define our goals as being SMART. So that stands for specific, measurable, attainable, relevant, and timely. And not all the goals may have the same priority in your life. So, for example, there may be some things that have an absolute need, and you really need to make sure that you're able to do everything possible to meet those goals. And there may be other things that are wishes or wants, buying that vacation home or, being able to make some additional generous donation beyond like, your zakah or your regular giving. So again, all of this is really being done again to understand, what your wants are, your wishes are, and again, you can adjust this based on particular financial constraints. And really, what we're doing here is we're building that peace of mind so that you can help increase your confidence in your particular situation. We don't always know what situation or hurdle you may come across, but we do use financial modeling and technology to, again, help understand what the probability of your plan success might be. So, for example, if someone said, look, there's 90% probability that you're going to meet your goal, right? You would probably have a lot more confidence than if it were 50% or 60%. It's not necessarily going to tell you this is exactly how things are going to work out, but at least you have a plan that you can work towards. And again, like we like to focus on goal-based planning. So again, that's really focusing on specific questions like, do I have enough money for retirement, right? And what does retirement mean for me? What if I need long-term care? Should I buy a vacation home? And so then we can actually run multiple scenarios to give context on how things might play out using different assumptions. And again, that's just, again, helpful to understand what actionable steps that you could take. So after you've identified your goals, what's next? So let's talk more about some of these strategies and tactics to get us towards achieving those goals that we've identified. And then again, let's talk a little bit about what financial planning even means. It's, a word that I've mentioned a few times already. So there's a lot of different understandings of what financial planning or wealth management is. Some people might think it's just about having enough money or having lots of money. But really, it's about taking a holistic look at these different components that can have an impact on your financial life. So some of these things you may already be doing, and others you may want to focus more time on or hire a professional to help you. And again, as women, I know that everybody is different, but there are some general things that we tend to see that are similar for women in financial planning compared to men. So in general, I would say women do tend to put others first. That's kind of my general take when I work with a lot of women. So for example, women will usually ask about college planning for their kids before asking about retirement for themselves. And again, there's often a lot, you're juggling. You're taking care of patients, you have demanding jobs, you have family schedules. And so this can often lead to other things taking priority over finances. But again, it's important to focus on again, like what are the important strategies for you? And sometimes there are situations, for example, where you may have a spouse or another relative who may be the one that's overseeing the finances. And so it's important again to start really, even if that's your case, you haven't really been involved in the finances, to again just start simple and again start getting educated and involved. Another thing that's important for women in planning is that women do have, tend to live longer than men. They tend to have longer longevity. So that money needs to last longer. And women also tend to be more generous with their money during their lifetime. So it might be, in terms of gifting to family or charities. And it's interesting, even when I sit with couples, like, that's often a big priority for women is, okay, well, how can I also give this money or leave this money to create a legacy? Another factor that's, I think, important to be aware of is also, how risk averse you are. So, again, not all women, but many women feel a little bit more risk averse. We have worked really hard for our money. We don't want to, subject it to a lot of risk. But again, that's something that's important to consider because investment portfolios can, have different levels of risk. And again, sometimes it's important to be more conservative to protect the assets that you have. But at other times, it might be important to be more aggressive so that, again, you're better able and aligned to reach the particular goal that you have. So all this really just, emphasizes the fact that, it's really important to champion your own financial success. No one is going to do this for us. But again, it's a lot. And again, when there's a lot going on in our lives, it's difficult to prioritize. So then I would say, like, in fact, we look at life cycle of financial planning, we can kind of separate it into five stages. We have, the teenage years, young adulthood, starting a family, and then planning to retire, and then also actually successful retirement. So if you're even getting closer to retirement, this is still a time where there's a lot of need for financial planning. And so again, depending where you are in that life cycle, there can be specific planning techniques and focus areas that can make a significant difference in your financial health. Now on here, you actually see, that it lists family conversations. And you may be thinking, okay, like what does that mean? Do I need to be talking to people about, how I'm spending within my family? And I would say yes, sometimes when it comes to family conversations, the key is communication. And it's not necessarily a number. It always, financial planning isn't always about numbers, but it's also about having a clear vision, and open dialogue becomes essential so that everybody who's affected by that plan, whether it be spouses or other people maybe that are financially dependent on you, are aware of the other spending and saving habits. So working together and doing things like coordinating 401(k) contributions becomes vital, for married couples. If one spouse isn't working, it doesn't mean necessarily that they can't contribute to an IRA if the other spouse is. There are things like spousal IRAs that can be used. But again, these discussions, I would say, not only strengthen a financial partnership, but can also help balance differing styles. So one person might be more conservative, the other might tend to spend more. But again, having these discussions can again help, build a plan and financial responsibilities sooner than later. And again, I highly encourage both people within a married couple to attend meetings. So again, if one of your spouses is, the one who's been more involved with your advisor or in this, just, start attending the meetings. It can really be an eye opener into kind of what are opportunities on things that you can work together. And of course, like sharing this information with children is also important. Young kids can learn about money management, learning about, if they get money, then how can they portion it to spending, saving, and giving. Making it a game at a young age can really help instill those healthy habits. And finally, I would say, like, it's really important to talk about self-care, particularly for women who often put themselves last. So we know that when it comes to finances, it's important, that we are planning for things that we know that we're going to need. We can take care of ourselves. We're not a burden on others later. And, we all know that burnout is a real factor. And so getting finances in order early, could help you maybe, ease up a little bit later in your career, potentially, not have to work for money as long as you thought you needed to. So with that, let me jump into retirement planning. And with retirement planning, again, this can be a wide range of topics. But again, just for those of you who may have an employer retirement plan where you can contribute money from your paycheck, I would recommend, looking at how much you're contributing. If you don't not sure, you can look on your pay stub and see. But at a minimum, you should likely be contributing at least enough to get your full employer match, and ideally aim to contribute at least to 10 to 20% of your income. And if you found that you've changed jobs, again, with an old retirement plan, you can roll it over. So make sure that you don't have these like old 401(k) plans like that you've forgotten about or hanging around. You can consolidate them either into your current 401(k) or into an IRA. Now, IRAs typically offer more investment options, including halal investments, which 401(k)s may not always offer. But 401(k)s can have better creditor protection. So again, it's important to just be educated about these things. And again, if you're working with an advisor or a planner, then they can help you with that as well. So again, like when it comes to retirement planning, I would say it's really about being consistent. Utilizing a retirement plan is great because it allows you to gradually add money over time. It's one of the reasons why most people have their greatest savings in their retirement plan. It's not because the investments in the 401(k) were amazing. It's because the way the retirement plan works forces you to contribute something every pay period. And so that gradual increase and that gradual contribution and the compounding return again becomes really powerful over, a 30-year, working period. And there's things also like health savings accounts. We don't have a lot of time to delve into that, but those are other great ways, to be able to save. When it comes to education planning, again, like I said, I know that's important for a lot of mothers, or women who, again, are, involved in the education of other younger family members. So with this, again, I would say it's important that, you don't, forsake your own retirement savings for your kids' education, savings. Again, while there are financial options for education, there is really no such safety net for retirement. Even Social Security really isn't a complete solution. So, women will, I would say, often express guilt over not saving enough in their kids' education. But again, it's important to recognize that, not saving adequately for retirement could lead to, again, either having to be more financially dependent on your children later in life. So again, it's about having that balance. Now, education expenses are increasing about 5 to 6% per year for future costs. So again, it's higher than the regular inflation that we hear of like, target 2%. And so again, while a lot of colleges might offer some merit-based scholarships, most financial aid packages consist of loans. So that's why I always encourage my clients, to try to save as much for their children's education as possible. And there are three main types of ways that you can save for education. There's 529 plans, Coverdell Education Savings Accounts, and UTMA accounts. Now, 529 plans are very popular, but before I go into a lot of the details, unfortunately, there aren't any 529 plans right now that offer halal investment options. So if that's a priority for you, then unfortunately, a 529 plan is not going to offer that, even though it does offer some good tax benefits for education-related expenses. Now, there's also Coverdell Education Savings Accounts. They have more flexibility in how you can invest, and you can invest them in a halal way, but the contribution limit is a lot lower. It's only about $2,000 per child. And again, there are income limits to contribute. And finally, there are custodial accounts, which are called UTMA accounts. These are basically like investment accounts for children, but they again have a lot of flexibility. So if you think, your kids may not need the money for college because you're still working or because they get a scholarship, in that case, that money could be used for other things for them, like, wedding expenses, buying a first house, starting a business. So that's a little bit on education planning, but I would say, another important thing that often women want to prioritize is their charitable giving, specifically their zakah. So of course, as Muslims, zakah is a big part of our charitable giving. And again, it's something that's obligatory to all of us, regardless of our gender, age, mental status, as long as we have a certain level of assets. So when we talk about zakah, oftentimes it's again that spiritual element, which is very important. But there are also ways financially that we can try to have more effectiveness in our giving. So there are, oftentimes just, people who will say, I'll just write a check, right? You get asked to make a donation, you write a check. But writing a check actually may not be the most tax advantaged approach to give to charity. So, for example, if you have a taxable investment account, one effective strategy could be gifting stocks that you've held for more than 1 year. This could actually allow you to be able to give more by avoiding, taxes on the gain of that appreciated share. So let's say you bought a stock for $5,000 a few years ago. Now it's worth $10,000. If you donate that stock directly to charity, you can then deduct the full $10,000 without paying any taxes on that $5,000 appreciation. So essentially, that $5,000 that you earned has now allowed you to give $10,000. And we also have clients who have donor advised funds. That's another tool that you can use. And a donor advised fund is a charitable fund that allows you to accumulate charitable dollars for giving in the future. So when you put money or shares in the donor advised fund, it's often referred to as a DAF. You get an upfront tax deduction. There you make the contribution. So let's say that, you've already, made all your charitable gifts for the year, but then you realize like, it would be really great to have a higher charitable deduction on your tax return and be able to save more in taxes. So when you put your money into the donor advised fund, you get the deduction for that year, but you can use that money in future years to give to charities of your choice. So for example, next year, in 5 years, maybe you want to be able to start saving so that you can pay zakah when you're retired and you no longer have the same cash flow. A donor advised fund is a good option for that. And again, we do see families using it also to help build kind of a legacy and charitable values, again, with their children. There's also an option for anyone who is either over the age of 70 and a half or has parents even who are over 70 and a half who may have money accumulated in retirement accounts in IRAs especially. They're able to now give what is called a qualified charitable distribution, which is where they can take a required minimum distribution after a certain age from the IRA and directly give that money to charity. By doing that, you actually avoid taxes on the distribution. So if any of you have a 401k or an IRA, again, that's pre-tax, you haven't paid taxes on that money is left to grow tax deferred. But at a certain age, you have to start taking mandatory withdrawals. So at that time, you have to claim the income and pay taxes. But this strategy actually allows you to avoid paying income tax on that and be able to give that portion, directly to charity. So in that way, an IRA can almost become kind of like a charitable giving vehicle. And again, we have a lot of physician clients, who are using their IRAs again as a charitable giving vehicle after the age of 70 and a half. So we also I want to quickly touch on, estate planning, because the purpose of estate planning is to preserve assets that you've spent a lifetime building, protecting your loved ones and ensuring that your wealth is distributed according to your wishes. And of course, if you want it done in accordance with this Islamic guidelines, it's extremely important that you actively prepare an estate plan. So additionally, this can mean, managing potential estate taxes that could arise after your death. That's not as much of a concern anymore in most states because, again, there's a very high exemption level. So I won't delve into that too much right here. But again, there are some documents that everyone should have. And you should discuss these again with an estate planning attorney. So first of all, there's a will. Now, a will is a document that everyone should have that appoints, guardians for children if you have them, and also specifies how you want your assets divided. If you don't have a will, any individually owned asset without a beneficiary is going to be distributed according to your state's laws, which of course is not going to likely align with Islamic inheritance guidelines. The second document is called a living trust. This is a tool that can help you avoid probate, which is the process where the courts, publicly, look at the will and make the distributions. And there can be a cost, but I would say time also. And so if you want to make things very easy for your family after you're gone, a living trust can help them avoid that hassle. It can also maintain privacy for you, and it can also designate how the assets should be distributed upon your death. There's also the healthcare power of attorney. And again, I'm sure you all are familiar with this one, but again, this is what helps you appoint someone to make healthcare decisions for you if you're unable to do so. I would also just highlight here, if you have, a child that is just turning 18 or older, the healthcare power of attorney and financial property power of attorney also become important for them because once they're 18, again, you are no longer maybe able to make those decisions. So they should have that document that gives you that power if that situation arises. And then there's, again, the financial power of attorney. This designates someone to handle your financial affairs. If you have joint accounts, be aware of how that joint account is titled. So again, the transfer to that designated person upon your death happens. So it's again important to review any, co-ownership provisions and account titling. And then finally reviewing any beneficiary designation. So if you have IRAs, life insurance, annuities, see what the beneficiary designation on those so you know exactly how those assets would be passed on. If you have a large estate or you have, family members with special needs, again, there could be additional planning strategies that you might need to look into. And I would also touch that, on the fact that many physicians are also concerned about asset protection planning, right? So this is important to protect your assets if you encounter, of course, like a medical malpractice lawsuit or other kind of creditor. And again, you may have an idea, well, I've had these things, my family kind of knows what I want. But again, unless you have these documents in writing, it's really difficult to know whether that's actually the case. For example, I had a client who once had three children. She was very comfortable with just everything going to her eldest son as the sole beneficiary. And, when I asked her about this, she said that, she viewed that the oldest son was the most responsible and, he knew that he should distribute, according to the Islamic inheritance. But again, like while this was, very well intentioned, the idea is that it could lead to misunderstandings among the family. There may be other tax issues or questions that may arise. So again, really it's much better to, handle all of this during your lifetime, really make things easier for your family. And we're running short on time, but to touch on investment management, there are again several surveys, including one from Fidelity that found that actually women outperform men in investment returns by 0.4%. Now, that might not sound like a lot, but again, when you compound that over many years, it can be very meaningful. So I would say, this is, probably due to the fact that, oftentimes women may not be market timers. They may not be, chasing after the newest, shiniest, riskiest investment. But with that said, I think it's really important to also envision ourselves as investors, people that are really looking to have meaningful investments because we want our assets to grow. And again, being confident in how to do those investments becomes very important. So when we talk about investing, we're talking about stocks, we're talking about fixed income. And just, very quickly, stocks represent ownership in a company. So again, and it's like as if, there's a public company and you're buying a part of it, right? So again, a stock again could be in for a company that has halal lines of business. It could have haram lines of business. It could have a lot of debt on its balance sheet. That company could be dealing in riba. So these are why it's important to understand again what is halal investing, what are the rules of riba, and ensure that again you're being able to invest in a way that's aligned with your Islamic values. And again, we actually have a lot of information on our website at azadasset.com on halal investing that you can learn about as well. But again, this is like I would say like a key aspect is really to start understanding again how investment works. And when assessing your investment risk, there are some key aspects to consider. One is time horizon. So how long is it until you need to access the funds? With risk capital, what is the amount that you can afford to lose without jeopardizing your financial well-being? Also, your investment knowledge, how your understanding and investing can influence your risk tolerance. I would highly recommend a book called The Psychology of Money. It's a great book to really, again, start understanding again how you should be thinking about money as well. Um, and finally, again, like also kind of recognizing what are your feelings about risk, right? What is your personal comfort level? And is that personal comfort level really aligning with your goals? The level that you're comfortable with, will it still help you meet, all of the things that you want to accomplish? And so again, I think it's important to, look at these things over a long-term time period, right? So this table here illustrates how $2,000, $5,000, $10,000, for example, can be invested and what it grows to with just, what it grows to with just 6% return over time. So the earlier you can invest, for example, you can see how much more that you can accumulate. So of course, if those of you who are, starting out in your careers, it's a great time to start saving and investing, even if it's a little bit of amount of money. But of course, even, continuing that into your 30s, 40s, 50s, 60s can still yield benefits. And finally, I would say, one of the important things is again having that recurring contribution. So, looking at, clients again that are now in retirement, including my own mother, having a plan where she was contributing regularly, on a monthly, annual basis, allow that contribution to grow and compound over time, and really allow her to build a comfortable retirement without having to give it a lot of thought. So, when we're very busy, that's a great way to kind of, set it and forget it. Set up the contribution amount, something that you're comfortable with, that you don't necessarily need to change a lot. And then again, just stick with it. So the question on the slide, is are you prepared for the unexpected? And, I always tell my clients that the number one thing we know about planning is that the plans will change. So you may have been doing all the things we've been talking about, but what happens if, you lose your job or your marital status changes, right? These are all things that can make us very nervous. But part of what we do in financial planning is also modeling some of these situations. So again, kind of really bringing your greatest fears to the forefront and saying, well, if this happened, would I be prepared? Would I be ready? And I would say that's another thing that financial planning really can help. It can help you again prepare for the unexpected. And when that does happen, we can always go to the plan and adjust it again. With that being said, again, our goal is to try to ease as much of a burden as possible when it comes to finances. So, these are things that, again, a lot of women will ask themselves. And, again, maybe your questions are different. But again, rather than kind of knowing that these are things in the back of your mind, again, bringing those questions forward, asking them, and giving yourself the ability to create a plan that tackles them. And again, just like we can't control the weather or the stock market, we can't control, relationship changes, health issues, family changes, but we can bring in that umbrella for when that thunderstorm rolls in. And again, that's what being prepared means. When you know everything, when you have everything in one place, and you can get on track with any missing items. So having all your documentation ready, like I mentioned, listing your accounts, statements, estate planning documents, having an emergency fund ready, so you won't need to figure out where to pull money from, like if the roof starts leaking. All of these things can be beneficial. And again, with the right team in place, an advisor, accountant, estate planning attorney, you can also know who to call to help you through those times. So again, we know this topic is very overwhelming, but you're not in this alone. There's a lot of information, and of course, there's no way for you to know everything. So, like I said, make sure that you have a team in place that listens to you, because again, being the boss of your own finances is very, very important. So with that, I will pause and we can take questions. If you also would like to schedule a one-on-one consultation, you can go to azadasset.com/contact, and schedule there, or send an email to hello@azadasset.com. But with that, I will give it back to Amber, and we can take any questions that might be out there.
Thank you so much, Fatima. Thank you for addressing some of the specific issues and behavior patterns that you've noticed in female clients. I think that some of the most common fears that you recognize that Muslim women, particularly in medicine, have around money, you offered a lot of really practical ways that they can work through them. Depending on what may be going on in their life, especially with the unexpected. So thank you so much for covering those specific issues. I know that there was, a lot of particular questions regarding that. To our attendees here, if you guys have any questions, please feel free to put them in the chat. We do have a couple of minutes before our webinar closes tonight. But I did want to open up actually with a question. You talked a little bit about halal investments.
Mm.
And I think that when it comes to talking with a CFP, this may be a more particular way of understanding it. But just generally speaking, would you be able to walk us through just what a simple framework of choosing investments in a Sharia compliant or a halal way, especially for someone who may be new to this, somebody who
Sure.
does have, a gross amount of income and wanting to invest, where do they kind of begin when it comes to, that venture?
Yeah, that's a great question. So, just to give a little bit of kind of like financial education context about the types of investments, I mentioned, stocks are one type of investment, right? And then the other one is really fixed income or bonds. Now, conventional bonds that are out there, the way that basically what a bond is, it's a lending borrowing agreement. So, if you buy a conventional bond, you're lending money to a government, a company, and they're giving you an income stream over a certain time period, which is through interest. So the way that conventional bonds are structured, they're using interest or riba. So for that reason, conventional bonds are not Sharia compliant. They're not halal. So that's kind of one very easy thing to learn is, okay, I need to stay away from conventional bonds. The other thing is that when you go to maybe like your 401k, I think that's where a lot of women often have kind of like their first or may have one of their exposures to investing is, okay, I'm now eligible for a 401k. I log in, I'm setting up my, how much I want to go into it, and now I have to choose where to invest it, right? And they'll give you a lineup of different choices. Most of those 401k choices are going to be mutual funds, and mutual funds are essentially a basket of investments that are professionally managed by a manager. So essentially, what they're saying is, okay, we're going to kind of put together a whole bunch of stocks and bonds, and we're going to invest it for you, and it's going to be managed. There's a kind of a fee embedded in that to do that. And so that's how most 401k fund options are. They're mutual fund options, and you may also be familiar with ETFs. ETFs are also baskets of investments. Now, when it comes to halal investing, the issue with conventional mutual funds, conventional ETFs is that, again, there's a mix of a whole bunch of stuff in there, right? Because they're not particularly saying, oh, let's screen it out to avoid bonds or banking stocks, right? Because again, banks generate revenue from interest. So we have to avoid banking stocks. So these mutual funds and ETFs, which are conventionally available on the market, again, they're not going to have, a screen in place to avoid those sorts of things. So what we're kind of left with then usually is either we can look at stocks and kind of be able to see, okay, if I'm buying an individual stock, how should I analyze that? Or using halal mutual funds or ETFs that are available on the market that are professionally managed and do follow a Sharia compliant screening process. Now, when it comes to choosing a stock, let's say, and you want to make sure that's invested in in a halal stock, we take a look to see again, okay, what line of business does the company have? Where is it generating revenue from? So if it's generating revenue, for example, and it has lines of business dealing with alcohol, gambling, tobacco, unethical media, these things, right? That means again, if that revenue is more than 5%, we can't invest in it. And these guidelines that I'm talking about, like, if it's more than 5%, this is coming from an organization called AYOFI, which is the Accounting and Auditing Organization for Islamic Financial Institutions. This is a nonprofit organization which has created standards for Islamic finance. So I would say these are kind of like the gold standards. Every industry, needs to have standards. So alhamdulillah, now within Islamic finance, we also have that. So the AOFI guidelines, you might see that, as something AOFI compliant investment or AOFI guidelines, that's what it's referring to. But AOFI guidelines essentially say that you can't invest in a company that has more than 5% revenue coming from an impermissible line of business. You also can't invest in companies that have significant debt, which is typically characterized as either typically 30% or 33% debt, or have excessive cash. So these are, in addition to just the line of business, you also take a look at the financial ratios. And again, that's why people say, oh, well, like I can totally tell that, yeah, I probably shouldn't invest in, Philip Morris, right? But why is Amazon failing? Well, if we look at Amazon and we add up all the lines of business that it has, the revenue from alcohol, tobacco, unethical videos and media, if it exceeds 5%, then we can't invest in it. Or if a company, for example, like that, like let's say an airline, right? Or let's say a motor vehicle company, they have significant debt on their balance sheet. We may not be able to, we may think, oh, that's fine. It's a company investing in cars or building cars, but we're not looking at their financials. So that's why for a lot of people, it becomes challenging again to evaluate individual stocks. There are some online tools that have become available. Again, they have their pros and cons. But again, you can, if you're kind of starting out, I would definitely encourage you to take a look at, halal mutual funds and ETFs that are on the market. At Azad, we offer two funds. We do offer a halal fixed income fund. So I mentioned that, like, you can't, you should avoid conventional bonds. But what if you do need an investment that doesn't fluctuate a lot? It's focused on capital preservation. Maybe you need the money, within the next year or two. You don't want to risk, a market decline of 10% or, 20%, right? So we do have a fund for that. It's called the Azad Wise Capital Fund, and we actually designed it right after the financial crisis as the first halal fixed income fund in the US and to serve as a halal alternative to like a short-term bond. So that Muslims, if they needed a part of their portfolio that was more protected, they could have that, rather than having to go and purchase haram bonds or just keep their money in cash. So, but again, I would encourage you, to go to our website if you would like to learn, more details about, halal investing, or, happy to do another session just on that.
Thank you so much. Yeah, that would be great. We were thinking of the idea of having you coming back and doing another session, one that would be more specific.
Sure.
Now that we have this, the generalized overview, that would be wonderful. There is another question here about what do you notice, or what from your own professional experience, what are some of the most common financial mistakes that you
Yeah.
see some physicians making?
Yeah.
So that, how can we avoid them regarding different career
Sure.
stages, like as a resident, as an attending, mid-career, just
Mhm.
from your experience?
Sure. So I would say, like one big mistake that I see people doing is chasing performance, which is again kind of getting in that, getting caught up in that fear of missing out. You're at a dinner, someone's talking about some investment where they made a lot of money and start, chasing after that kind of performance, or you see a fund that's done really well recently and you really don't know why or what the risk involved in it is, and you go towards that and you invest in it. Unfortunately, I've seen some really sad cases of physicians that have worked their lifetime, alhamdulillah, saved enough to have a very comfortable retirement. But again, that fear of missing out, maybe in some cases it's a little bit of unchecked greed that comes into all, can come into all of us, right? It kind of pushes you towards taking risks that are really not needed. So again, it's always about evaluating your investments based on your goals, not what your friend did, not what, would, make you the most money the fastest, but kind of looking out for red flags when you're evaluating investments and I think having like a financial professional that you're dealing with who's a fiduciary for you. So that's the other thing. If you are working with another financial planner or advisor, make sure that they are legally acting in a fiduciary capacity, and you can kind of run those ideas by them because while you might have certain emotional attachment or excitement to an idea, they'll probably be able to look at it from a much more strategic perspective for you and kind of give you kind of that unemotional advice on it. And sometimes that perspective ends up being important, so that's definitely one thing. The other thing that I would say is, not setting up consistent investing over time. So, again, I know there's, when you're in medical school and you start, in your residency and, maybe your new salary is really pretty tight. There isn't a lot of room for savings. Then after residency, you start thinking about, okay, if you have, student loans, how to pay those off. And so it's kind of this idea that you keep pushing off saving and investing until later. Like, I can't really do much right now, so let me just wait and I'll do a lot more later, right? I think there's a danger in that. And one thing, I highly encourage my clients is to try to pay off their debt as soon as possible. So if that means taking, the first few years of your as an attending and using that time to really pay off loans rather than expanding your lifestyle, right? Like maintain your lifestyle and use that extra money to pay off loans and save. That's an excellent strategy to, to kind of get started out on the right foot. And then at a point when again you see that okay, maybe there's some a little bit extra that's kind of accumulating in my bank account every month. Like, every like, 3, 4 months, I've noticed, oh, there's an extra 10,000 that's just kind of sitting there. When you start seeing that, that means that you really should be having an automated investment that you're using where again, you're maybe putting in, even if it's like, $500 a month, right? In the beginning, or less, let's say it's only $100 a month or $50 a month. Setting up that habit, and like I said, one of the most powerful wealth accumulators is not an amazing investment. It's not that investment that's going to give you 30% or 50%. The most powerful wealth generator is time. So having more time in the market and investing can allow your money to reach, to compound and with that return. And again, it's also, I would say, the least distracting, least painful way, to accumulate wealth. You probably won't feel it if you have $100 or even $500 maybe at some point as an attending going into an investment account. It's not going to change your lifestyle. But over the years, like, if you can see that really kind of creating a really nice nest egg for you, or, the ability to have money which you didn't know you have. And it's not just about spending, it could also be about giving it. I would say like, some of the really kind of memorable, plannings that I've done with clients is, a client who, over time has accumulated this, and then, she had a great opportunity come up to be able to help expand an orphanage. And alhamdulillah, because she had been doing that savings over many years, gradual savings, she was in a great place to be able to do something like that when that opportunity came up. Again, it was not something that she was planning for. It's not something that she would have known about before. But because she had planned, it gave her that flexibility to be able to do that, at that time.
Thank you so much. That was very helpful. I guess we'll go ahead and wrap up here. I want to thank you, Fatima, on behalf of the Imana Education Committee. Thank you so much for your time and for sharing your expertise. This was very insightful, and we hope in the future that we can have another session together, perhaps on, kind of to kind of expand on some of the topics that you covered in the Q&A. Depending on what people would like to further learn about, also if you have the time and the availability. But thank you again. And for anyone who has any questions or comments, Fatima has shared her contact information at the end of her presentation. You can go ahead and please check out the Azad Asset Management. This webinar is being recorded, so please feel free to check it out and to share it with your colleagues and other people within our community. It'll be on the Imana YouTube channel as well as the Imana webpage as well. And so with that, we look forward to having you at our future webinars, education webinars that we'll have coming up very soon. Thank you so much and have a good evening to all of you. Assalamu alaikum.